Is order flow useless? Well, that's what the internet keeps telling me, including other YouTube channels. Of course, they're wrong. Order flow is extremely useful. So why are some people saying otherwise? Well, some of this comes from misconceptions about what we're really looking at when we're watching order flow. I also think a lot of it comes from traders that are honestly trying to trade instruments beyond their skill level in order flow. But don't worry, we'll get to all of that. Let's start with what actually is order flow. Order flow is the study of all of the orders in the market. So it's not about a type of strategy or anything like that. We're really talking about the data. Most people are only working off of price and volume, and there is a lot of information missing from that. For instance, when there's volume, who is the aggressor in that transaction? If you submit a market buy order, that order is going to be matched up with the first limit order sitting in the queue at the best available offer. If we have full depth of market, we can determine who the aggressor is. When that volume comes in, we compare what price it was executed at with what the best bid ask was at the time, and that tells us who the aggressor is. So once you have full market depth data, there's a lot of analysis you can do with it. With complete depth of market, we can also see all of the resting limit orders that are sitting on the exchange. That's what you're seeing on the DOM price ladder or on those Vista chart / bookmap charts. Now, the big misconception I see is that people think reading the DOM is all about those currently resting orders. That's where people will say order flow is useless because those orders can just cancel. Well, that's looking at the wrong thing. And by the way, this is also why I just really dislike the Vista / bookmap charts, because I think it focuses people's attention on the wrong thing. It's not about those currently resting orders, but rather how the orders react and change to different things, particularly other orders. That's how we can get an idea of the state of the market. And in particular, we want to know what is the state of the latent liquidity. Latent liquidity, you ask? Let me explain what I mean. What you see resting on the DOM at any given time is the resting liquidity. Traders place such orders because it gets them a spot in the queue and makes the order a lot more likely to get filled. If you're a market maker, being at the front of that queue is really important. However, there's also a big disadvantage to placing resting liquidity. Everyone else can see it. So a lot of liquidity providers won't submit their orders until it's right at the price that they want to execute. So if we're looking at the 10-year treasury, for instance, what you'll typically see is something like this. When we're a few prices away, you'll see 3,000 to 4,000 orders resting at each price. When that price becomes the best bid / ask, some of those orders will pull. Usually around 2,000 to 3,000, we're just saving a place in the queue and will automatically pull if there is any chance that they will be executed. There are some other orders that are a little more daring and will wait until at least a little volume has traded at that price before pulling. Now, you also see it the other way with the stacking. As we move away from our price, at first only a few hundred contracts are put up, but as we get further and further away, more contracts will stack until you get the normal 4,000 sitting there that you have at most prices. They're placing these orders basically to reserve their place in the queue just in case they need it later. And then if they don't actually need it, they cancel it before it executes. However, despite all that stacking and pulling, you'll often find that it still takes more than 2,000 to 3,000 contracts to tick through a price. And most price levels will have tens of thousands of volume that have traded through the session when you look at the volume profile. So that's what we mean by latent liquidity. The majority of the liquidity that actually trades does not come from the orders that are just sitting there all morning. They're still limit orders, but they're only submitted just before they would get filled. So to get an idea of what the resting liquidity is, you really have to watch the area as it trades. So what we're really doing when we watch order flow is we're looking for all of those little changes and watching out for changes that are maybe a little bit unusual. So for instance, if we tick up, usually there's about 500 contracts that will automatically stack behind it. But what if all of a sudden they immediately stack 2,500 contracts instead? Or when we tick up and almost all of the liquidity at the next price immediately pulls. So it's kind of almost like changes in the changes, yo dog. Most importantly though, I'm watching how much actually trades. Every time that price ticks up or down, how many contracts were available versus how many contracts it actually took to tick through. Each little data point can give you a feel for what the state of the market is overall at that time. We can really only see this by watching the full depth of market, keeping track of how the stacking and pulling tends to go as we move, and comparing to what actually happens now when the volume hits. So most of the time, I'm really only watching the inside 2 or 3 prices because that's where most of the action is happening. Now, if you want some hints, one behavior that I look for in particular that is caused by the latent liquidity and that we have empirical backing for is what I call a liquidity hole. These tend to be caused by places where we moved through an area very quickly or we traded a lot of volume at that spot. Often after such an event, you'll find that nobody is really willing to put up much liquidity at that price anymore. So you'll see it like there was a ton of excitement before, but now neither the bids or the offers are willing to put more than a few hundred contracts at that price. Basically, the market makers are becoming strained. They've taken on too much inventory and they are more reluctant to provide liquidity at that price. It's basically an area of low latent liquidity. This paradoxically results in an area that is difficult for price to move away from. It just gets stuck in that rut. This is particularly noticeable in the 10-year treasury chart where trending markets can instantly shift to going nowhere. Now, if you want to understand more about why this happens, and I do have a couple of other videos about this, in particular the video about improving a volume profile, but really you should just read the study From Walrus Auctioneer to Continuous Time Double Auctions. But the general idea is that as a retail trader, you might want to think twice about these areas because you could potentially just get stuck in a position that goes nowhere for 45 minutes. Now, I feel really strongly that I should try to back up what I'm teaching you in videos with research and verifiable information. That way, it's not just my word against somebody else's, and we can let the market data speak for itself. Now, that's always been hard to do with DOM rating because it's so complex and there is a lot of intuition involved. Well, recently, a study was released called Disentangling the Joint Dynamics of Prices and Order Flow. By the way, also by my favorite researcher, Jean-Philippe Bouchot, but I think this study strongly supports our approach to reading order flow. In the study, they basically filter for these changes of stacking and pulling in the market depth, and they turn those changes into a sort of a word or token that they can pass into a large language model. So it's basically like ChatGPT reading the DOM. We've basically figured out how to synthesize human intuition, but in a way that is reproducible so that you can collect empirical evidence. And the study does show that the model produces highly predictive short-term signals. Duplicating that study is definitely on my short list of programming projects to pick up in the future. Now, one last very important thing I want to cover is that I highly recommend learning how to read the DOM from watching ZN, or otherwise known as the 10-year Treasury note futures. The behaviors that we're looking for are much more clear in the Treasury futures. I know some people don't like them because they're a little bit slow, but it really is the best place to get started, and there's a lot of other advantages to trading them. But if you want to learn more about that, again, I have a video about that, trading the Treasury futures and the micro Treasury futures. But one of the reasons that I think there's a lot of nonsense out there about order flow is because everyone is trying to trade equity index futures. Listen, equity indexes are extremely advanced instruments for reading order flow with. The changes happen faster, they happen over a wide range of prices, and there is all sorts of correlations, hedging behavior, a lot of stuff that you have to disentangle from the order flow to understand what's going on. Not to mention that most of what you see in ES futures on short time frames really is just random, and randomness is really good at fooling us. So if you really insist on trading equity index futures, I would suggest you spend a few months reading ZN first and graduate to something else once you've got a hang of it. And everything that you need is on this channel for free. My order flow video series in particular has really good information that you will not find anywhere else, and I believe gives you the best start to reading order flow. So I would go check out that playlist if you haven't already, especially those last few videos. Those last few videos really demystify markets. And of course, if you have any questions, don't be shy to ask them in the comments. A lot of this really is about developing intuition because it takes a bit of time for your brain to sort it out at first. And asking questions will really help you learn faster and crystallize those concepts. So don't be afraid to ask a question. And if we really need to go into more detail, maybe it'll be my next video. So anyways, thank you for watching. Stay excellent, team.